Amid festive cheer and GST cut, the Indian economy is expected to accelerate in the coming months. To talk about the impact of that on the Indian economy and the Indian commercial vehicle sector, we have with us Mr. Shenu Agarwal, MD and CEO of Ashok Leyland. Thank you, Mr. Agarwal, for talking to Autocar Professional.
Thank you. Thank you very much.
What are the immediate reactions? What is the kind of impact that you see on the economic activity, this significant consumption boost? How do you see that reflecting on the commercial vehicle space?
Yeah. I think, overall it is a great boon for the overall country and especially for the automotive sector. But I would say that the chances of CV sector getting benefited from this is even more.
Multifold more.
Yeah, and the reason I say that I think most of the industry is just looking at the price cut,
Right.
and therefore bringing those fringe buyers, bringing the first-time buyers,
Right.
people who are hesitating,
Right.
move them over the hurdle.
Right. Right.
But in our case, it's not just the price cut.
Absolutely.
One thing is the price cut itself is very substantiative because
Right.
the price of the commercial vehicle is in the 40 to 50 lakh range, especially
Right.
the heavy-duty truck. And therefore 10% is quite a bit of money.
Yeah.
But that is only one.
Right.
The other part is that since this is a reform which is not just touching the automobile, but it is touching every sector, every business, and pretty much every consumer of the country.
Absolutely.
We are expecting that the overall consumption will go up.
Right.
And when the consumption goes up, whether it is a toothpaste or a biscuit or a
Yeah.
car or
Yeah.
anything else, then the demand for the freight will accordingly move
Right.
up. I think that will be the biggest boost for the CV sector, even more impactful than the price cut itself.
How do you see the market changing? Because we've been over the last few years in a low single digit, either plus minus, and the entire cycle has gone through a complete change post the category moving upwards of 55 ton and above. So how do you see the growth in the commercial vehicle sector? And tonnage probably we might have crossed pre-COVID, but in terms of volumes, this is the time, and how do you see the next cycle emerging for the industry?
Yeah, so see, we have been talking about this issue of the aging of the fleets in the CV sector. And we were all wondering, why this aging is going up.
Right.
And there is a lot of argument and debate whether it is because of the tonnage or whether it is about dedicated freight corridors or things like that.
Yeah.
Right? But we always were, I think, of the consensus that it really needed some trigger. Because it is a fact that there are still customers, huge number of customers, who are still using BS2, BS3, BS4 trucks.
Absolutely.
And it is also a fact that when you run a BS6 truck versus a BS4 or a BS3, you really gain on TCO. Substantially you gain.
Right.
On the fuel, on maintenance, on many other aspects, right? And therefore it doesn't make sense for a customer actually to use a
extend the
BS3,
usage
BS4
cycle.
truck, right? However, it just needed some trigger for customer to say, listen, now I am going to sell this for 10 lakhs and I'm going to invest 40 lakhs in this new one.
Right.
GST could be that trigger.
Trigger.
For two reasons, not just because of the price cut, not
Right.
because 40 lakh will become 36 lakh,
Right.
but also because there will be additional freight demand that will come.
Absolutely.
So we are very hopeful and
What's the
positive.
growth anticipation for the market, for
Very
tonnage?
difficult to give a specific number right now. I think, our industry is not sentimental in nature. Our industry is not कि कोई injection लगाया तो बंदा
Right.
खड़ा हो गया दौड़ने लग
Right.
गया.
Got it.
Our industry is a little bit more functional. It's
Right.
very rational.
Right.
People take time to take the decision.
Right.
Is very highly capital intensive.
Right.
50 लाख का गाड़ी 100 गाड़ी किसी को नया डालना है.
Right.
So it's a substantial amount.
I get it.
Right, and people just don't go by sentiments.
Right.
Although sentiment will improve, but rationality will still supersede.
Right.
So I think you give us 2-3 months
Yeah.
because our fleet owners want that much time
Right.
to relook at their whole business scenario,
Right.
to see how much demand is actually taking shape.
Right.
Demand growth is taking shape on the
The
ground.
economic impact on the buying.
Economic impact, right? So, and then look at their whole equation and then decide. I would think that from it will not be the case of passenger cars
Right.
or two-wheelers
Right.
that 23rd September you will...
Everything is going to go up. Yeah.
It's not like that, right? But within next 2-3 months, when fleet owners have time to relook at their whole business model,
Yeah.
I think we'll have a great time.
So it's the next calendar year when you actually really see the impact of the
even this year. I said October, November because the monsoons would go away.
Right.
This will give people a couple of months to
Right.
think about their business models and make those decisions
Right.
about purchasing new fleets or replacing the old ones.
Yeah.
And I think from October, November onwards, we should see some momentum.
So you mentioned about replacement cycle and the cyclicality of this market. It's completely what was the past reference does not appear to be true in the current context. So when you talk of commercial vehicle cycles, which cycle are we on? It's very hard because tonnage-wise, there was enough tonnage to carry, but
Yeah.
volume growth-wise, we were at a low single digit. So how do you see the coming 5 years for the Indian industry?
Listen, I kind of don't believe in these cycles anymore.
Okay.
I think it is a thing of the past.
Right.
The way our country is growing and the way the freight is growing, even that is why when people ask me, what is the impact of the Eastern Freight Corridor?
Yeah.
I say, no, listen, don't think narrowly. Because the kind of momentum our country is going through,
Absolutely.
the kind of freight it will get generated, the kind of work which will happen on infrastructure, construction, mining, ports, I mean, it will be phenomenal. Right? And with every new project, with every new thing happening, there is an additional demand for a truck or a bus.
Right.
So I really think that we are away from those past
Now
cycles.
we're going to create the new cycles of the future.
Yeah, these are, I think, will have a good cycle, but like I said, we are a very rational industry.
Right.
So we will go through a certain pace, but we will have, I think, a lot of consistency now.
How do you prepare for the future then? And how do you see I understand that very difficult to decide as to which way the market is going to go, but what's the long-term growth trajectory of the Indian market? You've shared that with investors in the past and your own long-term vision as well. How do you see the market evolving and your own vision? Where are you in that journey?
See, in the long run, we think that this market should grow at the same pace of the economy. Right? The economy is going to grow anywhere between 5 to 8. I think CV sector also in the long run should grow 5 to 8. Ashok Leyland is planning to grow better than the market. So whether it is 2% better or 5% better, we will see how it goes. But we are putting enough recipe, enough ingredients in the recipe to see that we grow better than the market.
Right. You've been outpacing the market for last several years and you have a bigger ambition for the midterm as well. How are you progressing with the plan that you had shared with the investors?
So 2 or 3 things. I think one was that we wanted to really focus on the profitability.
Yes.
Right? And the simple reason was that we wanted to gain cash.
Right.
And the reason we wanted to gain cash is because we are going through a lot of transition in our industry.
Absolutely.
And to be successful in the medium run, we have to make sure that we have enough resources and enough cash to be able to invest in the future and be ready for the future. That is extremely important for us. So I think there we are doing very well. Last year we
did had a mid-teen margin target.
12.7, last year. This year we'll do better than that, hopefully. And then I think in a couple of years we should hit that 14-15% goal. Right? So that is one. The other thing that we wanted to do is to expand our, let us say, non-core businesses.
Right.
If I just consider core as a truck and bus, right?
Got it.
So 3 levers we had spoken about.
Right.
One is exports. We are very happy with the progress.
Right.
We have been growing exports 30-40% every year.
Right.
This year also we hope to grow from last year 15,000 to minimum 18,000 this year.
Fantastic.
And we are on a good track. Long run, we want to get to a 50,000 annual volume for exports, and we see a clear roadmap towards that in terms of product, but also in terms of the market actions that we will do. We have 3 home markets. We have GCC, Africa, and SAARC. We want to add another home market to it, which is ASEAN.
Lovely.
And we are preparing that is the next big move for exports. It's a huge market. We think our products are very, very compatible for the market. We are looking for good partners. We are even thinking of setting up an assembly facility.
Fantastic.
Somewhere in Indonesia, Thailand. But long-term prospects of exports are really there. So 15,000 to 50,000 is the new mantra.
Okay.
Then the second stream of growth will come from the defense business. Now defense, we also have done very well. Last year, I think we grew more than double. This year also, we are looking at least 40-50% growth. And the order pipeline that we have right now, more than the actual revenues, is even better. We can see that within next 2 to 3 years at least, if not more, we can continue this pace of 30, 40, 50% growth
Fantastic.
in defense. And the last item on this non-core side is our power solutions and aftermarket business.
Right.
So there I think also we are looking at very handsome growth.
So small commercial vehicle pickup trucks is one space which is growing very fast, and those was very ideally positioned there. You wanted to expand your position there. What's the direction there? Could we go sub 1 ton, or you think that for Ashok Leyland 1 to 3.5 ton is a core and you're going to stick to that, or you expect more alternatives there?
See, the direction is has been set, and the direction is that right now we are addressing 50% of the market.
Right.
We want to extend that 50% to minimum 80%.
Right.
Right now, there would be several levers to do that.
Right.
It is not just the sub 2 ton product. In fact, last year we launched the Sati,
Right.
because we wanted to target a certain section of that sub 2 ton. We
Right.
didn't want to compete head on with the incumbents,
Right.
because there would be no fun doing that.
Right.
Right, it will just begin a price war and all that stuff. So we just looked at the market and we said, listen, a lot of these customers in the sub 2 ton are either moving upwards or moving downwards to 3-wheelers.
Right, right.
Right. And what we want to capture is the people who are moving upwards.
Right.
Right. So we positioned a product right at the boundary of sub 2 ton and
Got
2 to 3.5 ton. And we said, this is a product that will take care of these aspirational customers.
Right.
So that product has been very successful. Now there is a lot of opportunity within 2 to 4, within beyond 4 ton also. So
Not
there is
below?
Below, see, what our thinking is that below might be the 3-wheeler game in future.
They become bigger and bigger.
They will
with the
become
payload.
bigger and bigger, especially because the penetration of electric
Yeah.
in 3-wheelers is very, very high.
So your game is upwards.
So our game has to be upwards. You know, we don't want to go below and then sell a product which is purely a price product.
I get it.
Right? We want to give more value to the customer,
Right.
better TCO to the customer.
Yeah.
So that is our game.
Right.
Right? And then there are other initiatives that we are taking in the overall LCV 0 to 7.5 ton.
Right.
But the direction is from 50% to 80% within
Right.
next 3 to 4 years.
Right. Right.
And overall 20% market share. Right now our 20% market share is 2 to 4 ton.
Right.
But overall LCV now with
Yeah.
80% coverage, we want to gun for 20% market
20%.
share.
Just
That should double our numbers
Fantastic.
from currently 65,000 odd to roughly about 120,000 plus.
That is in the next three to 4 years.
Next 3 to 5 years. Yeah.
Right. Lastly, on the alternate fuel space and electrification space, a big partnership with CALB. It secures you from the requirements for electrification in the future. How does Switch evolve from here, or it is both?
It
Ashok
is
Leyland-
not, see, it is not just for our captive,
Yeah.
right? This is a new business we are looking at from a lens of establishing a new business. And I'll tell you why. See, right now, everyone in the Indian automobile sector has been concentrating on putting together an electric vehicle,
Right.
including us,
Right.
right? Which means that the whole powertrain
Yeah.
of the electric vehicle you have to master.
Absolutely.
You have so far mastered diesel and petrol in last 75 years, but now is the time to master this new powertrain.
Absolutely.
Okay. I think that we have reached a stage of maturity where we can now commercialize these products.
So you want to lead on the future of powertrains?
So that is one part. Okay.
Yeah.
Powertrain technology you have to focus on,
Yeah.
and we are focusing on, will further mature. Second challenge in this whole EV ecosystem from an OEM perspective is that in our diesel vehicle, the import content is 2%.
Right.
So there is no challenge.
Right.
Something can happen in China, something can happen on the tariffs,
Yeah.
something happens anywhere else,
Yeah.
we are protected.
Yeah.
We don't have any issues.
Yeah.
Right? I mean, you have seen,
Yeah,
no
yeah,
impact
yeah,
of
yeah,
tariffs,
yeah,
nothing.
yeah, absolutely.
We are quite protected. Now, when it comes to the electric vehicle, 60 to 70% of the content is imported.
Dependent. Yeah.
Now, what do you do now?
Yeah.
So the second thing that you want to focus on after the powertrain is to make the supply chain resilient.
Absolutely.
In today's world, geopolitical world, the only way to make it resilient is to localize.
Absolutely.
There is no other way.
Absolutely.
You cannot say China nahi main isse
Yeah.
le lunga,
Correct,
usse nahi usse.
correct, correct,
You
correct.
can't believe anything right,
Right,
now,
right, right.
geopolitically.
Absolutely.
अभी चाइना से यूएस में जाओ तो वहाँ ये issue है. US से यूरोप में जाओ, tomorrow you don't know what is the issue.
Absolutely.
So the only way is to localize.
Right.
Now localizing when EV penetration is 2% in
Yeah.
cars,
Yeah.
maybe 10-15% in two-wheelers, 1% in truck,
Yeah.
you would say, "Arey, kya kar rahe ho aap?
Yeah.
Are you going ahead of time?"
Yeah.
Right? But the thing is that this is a long-term game.
Absolutely.
So our philosophy is you start early,
Yes.
but you go step by step.
Absolutely.
Right? So that is why we have got into the battery business.
Yeah.
We will start now,
Right.
not wait for the market to emerge.
Right.
We will start now, but take our time step by step to develop those capabilities in-house, so that 40 to 50% of the content of the cost,
Yeah.
which is coming from battery,
Is de-risked.
we can control it
Right.
in terms of cost, in terms of quality, in terms of innovation, in terms of looking at new materials,
Yeah.
in terms of getting all the capability inside.
Right. Right. Right.
So that is the intent.
Cater to two-wheelers, four-wheelers,
Everything. So step by step, as
Yeah.
I said. First captive, which is CV. CV means other players also
yeah.
who are interested
Yeah.
to buying
Yeah.
from
Yeah.
us.
Fantastic.
Second is wider automotive, which is four-wheelers and two-wheelers and three-wheelers.
Right.
Third is battery energy storage.
Yeah.
And simultaneously create this R&D layer
Right.
on around this, so that we can bring innovation and not just depend on the technology from outside.
What is the potential business opportunity there?
Huge.
Billions.
Huge. I mean, it's like
What
you
is the
can't even-
incremental opportunity that
Let us
would
say 50% penetration of the total car industry. You heard these people saying 1.5 trillion by 2047,
Yeah.
right? And battery and EV
Yeah.
aggregates would be 30-40% of that.
Yeah.
So it's a huge opportunity.
Can it be quantified? Have you quantified that at the end of the decade? What kind of business will you do from that business?
We might have, but I don't have the numbers, but it's a huge opportunity.
Right. Lastly, on the other fuels, beyond electrification, LNG, hydrogen, how have you progressed?
Oh, good progress, but of course the market is a little bit far away.
Yeah.
We sometimes jokingly say we are the largest hydrogen ICE
Yes.
fleet in the world,
Yes.
right? But although the number is only 22 or 23,
Right.
but good progress. I
Right.
think we are on the powertrain side. I think within a couple of years, I would say that we will have a product that would be the leading technology in the country
On
and
hydrogen ICE.
ready to commercialize.
Right. Any last word on Switch? Where do you take the business from here?
Switch is doing very well.
Yeah.
Switch, last year we wanted to make it EBITDA positive, which happened. This year, Q1 already PBT positive. So this year the target is to become PAT positive, and I am very, very sure it will happen.
Midterm, have you defined anything for Switch?
Midterm, same profitability as Ashok Leyland.
Same profit.
Yeah. And leadership position in buses.
Buses. Fantastic, sir. Thanks for your patience and time, and really appreciate it.
Thank you.
Thank you, sir.